All right, so let's talk about how your return on assets is calculated. It's calculated by cross-pollinating your income statement and the net income from that income statement to your total assets, which is on your balance sheet. So that's the first way that we're showcasing how you're cross-pollinating and the strength that you get by looking at both of those statements together. And really, why is that important to you, right? Well, return on assets is important because during down periods in a business, you really need to focus on your ROA. So building a strategy to actually increase return on assets helps companies create more profit with less assets, which ultimately gives you a more sustainable business that allows you to have better cash flow, especially during those down periods. Because lots of businesses go through cycles, and if you're seasonal, then you certainly experience those. But you do want to focus on increasing your return on asset number, because the higher that number is, the better things are within your business. So how can you do that? Well, really, return on assets is showing how well your company is generating that profit by using its assets from the balance sheet. And every employee is involved in generating revenue on assets within the company, okay? That's a big thing that people a lot of times forget, is each employee is responsible for, a section of that profit each period. And what are your assets that you can put to work? Well, you have cash and receivables. You have inventory that you've purchased, maybe buildings that you have or land, maybe even facilities, okay? You may have vehicles. So if you're a service-based company and you're actually out doing services around you, what kind of return on assets are you getting from your investment into those vehicles? And then finally, the machinery. Are you using anything from a machinery standpoint that is, producing your product? And ultimately, you're expecting a certain amount of profit and generating a certain amount of profit from each piece that you are, manufacturing. So those are really important things to understand when it comes to your return on assets. And I will see you in the next video.